Good morning, all. CamelbackTrading.org coming to you this Wednesday morning, September 9th. And we're looking at the market profile of the SPY ETF for your own window trader. And we always talk about what happened in the market, but just as importantly is what didn't happen in the market. And I said this yesterday during the trading day in these last three time frames, said it in last night's video. What didn't happen? Well, we couldn't lower the POC. I said that's an incredible nuance, right? That you can't just discount. Right? Just look, ebb and flow of the market. A, B, C, D went up, got too long, flush out in E. F, G, H, I, part of J, go up, can't get the high today, flush out. The difference in this flush out is they took it to more extremes in the last three time frames. As the week longs got out, shorts came in, piled on, tried to push it even lower. They did a pretty good job of it, right? Even after the market closed, I was doing a consultation last night, and we traded as low as 329.65 about an hour after the market closed. And that was just shorts pushing it and pushing it, right? So what happens this morning? They don't get a follow through. We get above where they pushed it, and now this is nothing for my money's worth, but short covering. Not only are we back to the 10, we were 10 for 10 wide before that flush. Not only are we 10 for 10 wide yesterday, it was going to be an upside destination. As of right now, possibly a downside destination. You can't discount these nuances. Knowing your competition is so important, right? It's know yourself, know your competition, know the product you're trading. So the competition got too short in the last three time frames, early in the overnight, and they're covering. Now the question is this all they want to do, is cover shorts and then resume downward, or do we finally stop the one time framing down in the daily? All remains to be seen. But these are things you have to notice, and why the profile is so important and so visual, how it paints that picture. Okay, so destinations. Right now my pre-market high is 337.08, which would be the first one, and then yesterday's high of 338.06. Now, the 10 wide of 336.47, it depends in the next hour. If we open above it, it becomes a downside. If we open below it, it becomes an upside. M period, once again, will be a huge factor. You know how I feel about M period. If you get accepted into it at any point today, good chance you'll trade the whole thing. For the downside, right now, we either have the POC of 336.47, and then until we get more market-generated information, we have yesterday's low of 332.88, and then the pre-market low of 329.65. And then I gave you all the other destinations last night, down to those monthly and weekly gaps. I said the destinations are far and wide apart. Above yesterday's high, we don't have anything until 345.40 afternoon rally high. That's over $7 higher than yesterday's high. So expect major chop again. Right now we look like we'll be opening in balance, in value, the worst of your risk-reward trades. There's no harm in letting A period form. We're starting to get good volume. We're getting good ranges. So there is absolutely no rush to put a trade on at 9:31 in the morning if it's not a good setup. Plain and simple. So what is the game plan? Again, if we start opening around a 10 wide POC from yesterday, there is no trade. Now, if we ought to push up, you can certainly take a put if you would like at I's high. I'd be out above C's high, because then you would stop the one time framing down in the daily, and then right off the bat we know something changed. We're back into balance in the daily. So that's one play you can take. It's not a big difference. If I'm not mistaken, I's high is 337.74. Today's high is 338.06. So it's only about a 30-cent difference. So that's decent risk reward. If you were to open, drive up, take a short at I's high. If it gets above C, you get out. If not, if we hadn't traded at the POC yet, good chance we rotate back down to the 10 wide POC. So that's a put play. On the flip side, if we're to open in the next hour below the POC, do not get accepted into M, and that's going to be a difficult thing, right? We always say knowing acceptance in A period is a lot harder than B or C, because then you're one-time framing up or down, you get more clarity. So it would be difficult, but you can take a call play above M's high. If you think you're getting acceptance, you get out of it. If not, you could ride it back to park. That's if we're to open below park in the next hour. Those are two early plays. Again, if you're in my voice channel room, you're getting these plays all day long. Before I go to the charts, just quickly, triple Qs, same thing, in balance, in value, they're not at their park yet. And remember, they went out with a price probe right now, which is being firmly rejected. Okay, let's go to the charts. Actually, I'm just going to show you the daily chart for now. That's the important one, right? We always talk about before anything could happen in a monthly or weekly, something has to happen in a daily. Well, if we take out yesterday's high, we stop the one-time framing down and we're back in balance. I do believe at some point we will test this 50-day moving average. I do believe we'll test those monthly and weekly highs we've talked about back around the 327 and change level. That does not mean we can't get some kind of balance now inside of these last 3 days if we're to take out yesterday's high, right? So markets don't go bull bear, right? They go bull, balance, bear. Now if we take out yesterday's high, we're back to balance, and then we see, do we stay balanced for a while? Do we go back to bull? Do we go bear again? Things of that nature. It's a very, very visual game that we play here. Good luck trading today. Have a great day, and we will recap at 4 p.m.